Carlin, hi. Thank you for joining me today.
Hello, thanks for having me.
My pleasure. I have clients who are always asking certain questions. They come up repeatedly, and you know what? I thought that they should speak with an expert, and I just think that if you could give some insight, it may really be helpful for those people who are really considering purchasing a home. So I just wanted to ask you a couple of questions.
Certainly. All right.
So my first question for you is closing costs and down payment. What is the difference, and can one be used for the other?
Yes, so closing costs and down payment are going to be, let's think of them as two separate buckets. So our down payment is going to depend on our qualifying ratios and how much we require to be put down for your specific situation. So this could be 3%, 3.5%, 5%, 20%, whatever that is going to be in our own separate down payment bucket. Our closing costs are going to be separate. So they're separate in the sense that they come from the same place, but they go towards different things. So our closing costs are going to cover things such as appraisal fees, attorney fees, different things like that, property escrows. So we're going to pay your taxes, your insurance. So that is all going to be in a separate bucket that can actually be contributed to by the seller. So the seller can never contribute anything to your down payment bucket, but they can contribute to your closing cost bucket. So that's kind of the way I like to explain that to people. And I hope that was
very clear. That was great. Can you give some insight into the 20% down payment myth? Is it a myth? Is it a fact? Do you have to have 20% down? Can you shed some light on that?
Yeah, so this is the biggest myth in our entire industry. I really think so. The 20% is where the mortgage insurance falls off of your loan. So a lot of people say you're going to need 20% in order to get rid of that mortgage insurance, which is kind of a waste of money. And thinking back to when this myth came about, when interest rates were extremely high, that is true. You're giving a lot of money towards your interest. You're giving a lot of money towards your mortgage insurance if you don't have that 20%. Now, there's so many options as far as lender paid mortgage insurance, financed mortgage insurance, all kinds of different ways you can pay it up front. So you can take that mortgage insurance cost, put it in a smaller upfront mortgage insurance premium. And these are alternatives so that you do not have to pay a monthly mortgage insurance. So 20% not needed anymore. Really what you want to do is just make sure to talk to your loan officer and tell them your monthly financial goals. And with interest rates so low, that mortgage insurance is not going to be noticeable. So this is where we talk a little bit about buying power. So when you're at an 8% interest rate versus when you're at a 2.5% interest rate, your monthly payment is going to look a whole lot different. So you might have extra room in that to include that mortgage insurance. And if you are kind of thinking, well, maybe I want to save up till 20%, you might be missing your window and kind of pushing yourself out of that buying power. Makes sense.
Yeah, it makes sense. And it's a good way to phrase it. Many times I have buyers who maybe they're first-time buyers. They have parents that want to gift them some money to help towards the purchase of their home, which is so great. We should all be so lucky.
Absolutely.
Can you shed any light on that? Is that allowed? Are there any guidelines if someone does give you a gift to put towards the down payment of your home?
Absolutely. Yes, to be so lucky and to have such supportive parents. This actually happens a lot. So you can have your parents gift you money. You can gift your parents money. Flip it up a little bit. So you can certainly do that. All we ask is that you have a letter stating that it is coming from this bank account to this bank account, from this person to this person, stating that it is a gift, it is not owed back, and you are all in the clear for pretty much any loan. Now, I know we kind of mentioned maybe a friend giving this, and that could potentially be okay, but certainly not on an FHA loan. So FHA, we're going to have a little bit more strict guidelines on who can give that gift, but it is certainly possible. And like I said, it happens all the time.
Okay, so maybe the best advice would be to, if this is going to be your scenario, to speak with your lender early on the process so that they're very, very comfortable with what the guidelines are.
Absolutely, yes. Just make sure it's coming from an approved source and make sure your loan officer knows about it and how much and where it's coming from, all that jazz.
Okay, perfect. Here's a good one. Is it true or false? Is it true that you have to have a perfect credit score when you're getting ready to purchase a home?
No. If that were the case, then pretty much all these homes in America would be vacant. Because the fact of the matter is that most of the time you're not going to have that perfect credit score. A credit score is just going to tell us what have you done as a consumer and how does that affect the way that we give you a loan. So credit score, we're going to look at a couple of things: the length of credit, the amount of credit that you have, your utilization. And we're going to look at that to say, okay, do they have the ability to repay this loan? Do we really believe that if we give them $350,000 that they're going to pay it back? And the likelihood of you having a credit score that is perfect is just very low. So currently with COVID, we have, our guidelines have changed a little bit. Normally our credit score can go all the way down to 545. Now currently we're at 620, and it's pretty much stayed that way since we went into this whole thing in March. So 620 is our minimum credit score, and from there on you can pretty much qualify for any loan that we have at that credit score. So you do not need a perfect credit score at all. One other thing I do want to point out is jumbo loans are going to require a credit score of 700 or above. So just a side note there. And then when we get back to normal, our credit scores are probably going to go back down to the 580, 540 mark. And just another side note, additionally, we have people who help get our clients credit ready. So if you're, questioning your credit or have any questions on how you can get better before you're ready to purchase a home, definitely reach out to either of us, and we will link you with someone to talk with you about that.
Oh, that is great. If your credit is not where you want it to be and you're not in a position to be able to purchase a house now, can you talk a little bit about tools that are available to get your credit ready, maybe credit repair or other programs?
Absolutely, yes. So just because you have someone taking a look at your credit doesn't mean that you're going through credit repair. So I have a guy that I have used and leaned on for about 4 years now. His name is Jay, and he is with Synergy Credit. And so what he does is he will just hop on a call with one of our clients or friends or whoever and say, all right, Mark, your credit, maybe you pay off this debt and maybe you pay off this debt. And that might bring you where you need to be, but I don't think you really need to enroll in our services to get that credit score up. He's really great about talking to people before, they get into credit repair fully. And just saying, this might be something that you could try. This might be something you could try. He is the credit expert, and he is who I lean on for all things credit. Another good tool is Credit Karma. So I use it religiously. It emails me when I have any change in my credit score so that I can take a look at it, analyze it, see where it's coming from, take note. Every credit score is different. So if I apply for a credit card and you apply for that same credit card, it's not going to have the same impact on our credit unless we're the exact same consumer profile. So it's really important to keep an eye on that and use resources such as Jay or myself that can really get you set up in that right spot to be ready to purchase a home.
It's nice to know that there are experts out there that can just help you on the appropriate path, and that it doesn't mean you're in credit repair. It just means that here are some tricks that are going to help improve your score quickly.
That's right. Yep.
Thank you. So as it relates to credit, when I'm working with a buyer and they're just starting the process, we talk about determining how much home they can afford. And they're worried that if someone pulls their credit report, it's going to hurt their credit report, and it's going to cost them a lot of money. And it's going to cost them money each and every time someone takes a look at their credit report. Are you able to shed any light on that?
Yeah, absolutely. So they're right in the sense that a lower credit score will cost them money, in the sense that we use a credit score to determine what interest rate you're going to have on your loan. It is one of the many factors that we use to determine this. However, like we talked about before, every credit score is different. So if you're a consumer who has went and you have bought, let's say you applied for a credit card in June, you bought a new car in August, and you had another credit inquiry before we pulled your credit January 19th, 2021. You will have a profile that has been affected by the credit pulls a little bit more than someone who hasn't bought a car in 3 years. So that initial pull, it's going to depend on your specific credit profile and how that's going to really affect your score. But the ultimate thing is that you have 30 days to shop lenders. So they want you to make sure you're getting a good deal. They want to make sure you're getting a good rate, you're getting good customer service, so that when you go and pull your credit at that one place, you're not stuck using them. So they want you to shop around. They give you 30-day buffer to get your credit pulled for a specific event. So have you ever been to a car dealership and they pulled your credit by 10 different banks? This happens all the time. So that is them shopping around to get the best interest rate. Your credit is going to realize, wait a second, these aren't, 5 home inquiries and 5 auto inquiries. They're all auto inquiries. Same thing with your house. So if you're shopping for a lender and you get your credit pulled on Monday and it's Wednesday and you want to get your credit pulled by another lender, your credit is going to say, hey, I understand this. I know you're shopping for a house. We're going to let you off the hook and we're going to give you 30 days to shop around.
That is so good, because
I know.
I've met so many people who thought that they would be charged for each and every pull.
Right.
That's really, really, really helpful.
And you shouldn't be actually charged, as far as financially, we do not charge you to pull your credit until closing. So if you're going to a lender that says, we need you to give us $500 to pull your credit to see if you're credit worthy, then you should run as fast as you can in the other.
When a house is first purchased, the excitement explodes and the decorating ideas begin. So what are a few things a homeowner who, well, they're not a homeowner yet, but a buyer who hasn't closed yet should avoid doing?
Yeah, so don't go and buy a car. Really, that's the biggest joke of everything, is that someone goes and buys a car right after they get approved for their mortgage loan. So yeah, definitely don't do that. Every credit inquiry you have is going to need to be explained. So if I have someone, Molly is in the application process and we just got approved, and she goes out and pulls her credit at Old Navy because she wants to get $20 off of her purchase. I will get an email and it will say, she has opened a new credit line. You're going to need to document this. So anything that you do open, we will need to document. We always say don't buy a bed for a house that you don't have yet. And that is just another industry joke. We don't mean it, to be mean. It's just, we want to make sure that we can get you to the finish line so that you will have that beautifully decorated house, just how you like it.
Perfect. So, but what is the rationale behind it? So so let's say I've been approved, I just found a home, my offer was accepted, and I run out to Rooms To Go and I decide to get their special and I'm filling my house with all new furniture. Yes. What happens?
So it could affect our debt to income ratios. So our debt to income ratios are literally the bones of how we pre-qualify you or pre-approve you. So we want to make sure, again, I'm going to bring up that ability to repay. We want to make sure that you have enough money coming in monthly to cover not only your mortgage. We don't just want you to pay your mortgage. We want you to pay all of your bills. So we want to make sure you have enough to cover everything that's in your name. So if we go out and we buy a new couch and that increases your monthly payments, your monthly debts by $600, it could completely take you out of the qualifying range for purchasing a new house.
Got it. That makes sense. Thank you. Is it true that if you are denied, true or false? True or false? Is it true or false that if you were denied one time for a mortgage, that you'll never be able to get a mortgage again?
Absolutely false.
Yay!
Yay! All you need is a good partner to really take a deep dive into the finances and really figure out where that denial is coming from. So is it your debt to income ratio? Do you need to pay off this trade line to get your monthly debts down to allow that ratio to kind of free up a little bit so that we can purchase a new home? Or is it your credit score? Do we need to send you to our friend Jay at Synergy Credit, or do we need to save a little bit more in down payment money? Those are all really the kind of things that could make you not qualify for a mortgage. So you just really need someone who can look at your financial situation and look at your financial goals and build a bridge on how to get from one to the other.
Okay. Okay, thanks. That's really helpful. I appreciate that. What advice do you have for anybody that's thinking about buying a home from the vantage point of a lender?
Yeah, so I would say talk to them as soon as possible. Do not hide things. Really be as open as possible about not only your financial situation, but your financial goals. So every single client I talk to, I ask them this, and they laugh at me, but I say, what is your ideal monthly payment? And it's because I want to make sure that that is at the forefront of the way that we move through the mortgage process. So make sure that you're being open and honest, and make sure you're doing your due diligence by shopping interest rates and getting the best deal possible and getting the best help possible. So that's really all there is to it, is getting in front of them as soon as possible so that you can make sure to get through any kind of obstacles that might come in the way, and go ahead and get that fully underwritten pre-approval. So when you go to submit that offer next to someone who just has a pre-qualification letter, you're going to look as good as cash.
Can you tell me the difference, if there is one, between a pre-qualification and a pre-approval?
Absolutely. Favorite question ever. Pre-qualification is where you say, all right, Carlin, this is my credit score. I do pull your credit. This is my credit score. This is my income. This is my monthly debts. And basically you tell me this information. I look over and ask as many questions as I can. And then I say, okay, I'm going to run you through my desktop underwriting system and we're going to get an approval. This is an initial pre-qualification just because I haven't looked at your income documents. I haven't looked at your monthly debts, and made sure that this is exactly where we're going to be. So taking that jump from having just, guessed at everything to getting the actual documentation, looking at the documentation, analyzing it. Were there any large deposits that we need to source? What is the explanation for this other income? Can we gross it up? So we're going to really dive deep into those financials and make sure that you are good to go without a doubt. We're going to give you a fully underwritten pre-approval, which means our underwriter has looked at it. They say, okay, she is good to go, and we don't need anything else. We have an investor who's already committed to this loan, and all we need now is title work and appraisal. So that is a huge step up from, your flimsy pre-qualification, I'm going to call it, to your fully underwritten pre-approval where you're good to go and you don't have to worry about anything. All you have to do is go on Pinterest and just scroll see how you want your new house to look.
Start decorating.
There you go, without buying.
Without buying.
Window shopping.
I love it. Thank you so much for your time. I really appreciate it. This has been so educational, and that's my big thing is I think everybody needs to be educated when they make such a big decision, such a big purchase. And all questions are great questions.
That's right. Let's do this.